Welcome back. Before we invite Mr. Rakesh Sharma for the retail sales in October, we have a CNBC-TV18 exclusive. We learned from sources that RBL Bank is in talks with 3 players for its proposed fundraising. Ritu Singh, who has broken the story, is joining us with more details. Ritu, who are these 3 guys and what is the amount of money that RBL is looking to raise?
Well, Lata, that's right. There are 2 private equity players and 1 strategic player that RBL Bank has now been in talks with for its proposed share, capital raising. Bajaj Holdings and Investment is the strategic player, and Chrys Capital and Blackstone are also the private equity players that have been in talks. 1 or 2 or all 3 may end up investing in the bank if talks fructify. But so far, the deal has not been closed. We're also given to understand that as per the conversations that have been held with RBL Bank, each player is looking to take up to 5% stake because remember, above 5% stake, RBI approval would be required, and any individual investor stake in a bank, in a private bank, is capped at 10%. So in no circumstance can they exceed 10%. But right now, we're given to understand that they're looking to acquire up to 5% stake. The structure that is being talked about is a partial equity and a partial warrant structure, so that some of the dilution takes place at the current market price, and the remaining when the share prices are hopefully higher. On the off chance that the talks with any of these 3 investors do not materialize, RBL Bank, we know, is in dire need of capital, and therefore it has a backup QIP plan also in place. But it is hopeful that talks with at least 1 or 2 of these players should materialize. And if it does, next week is when there could be a board meeting of RBL Bank where these proposals could be discussed. 3,500 crore rupees is what the board had approved to raise money from a share sale. But in this tranche itself, as our colleague Nimesh had said, up to 2,000 crores may be raised via a preferential issue. RBL Bank told us that this query is speculative in nature, and therefore they will not comment on it, and we're still awaiting responses from Chrys Capital, Blackstone and Bajaj Holdings.
Okay. Well, to be fair, thanks a lot for that, Ritu. Nisha had, I think a week ago or 10 days back, told us that Chrys Capital is in the running. And now what Ritu is adding to the story is that there is also Blackstone and, more importantly, Bajaj Holdings,
that's an interesting one,
that RBL is speaking with. So that's incremental story for you. RBL Bank getting very serious about capital raising.
Okay, well, from that exclusive, now let's move to another interesting trend. There are some signs of green shoots appearing in the auto sector. October vehicle registrations have seen some positive momentum. In fact, they're up about 4%. That's on a year-on-year basis. To discuss this further, we have with us Rakesh Sharma, Executive Director at Bajaj Auto. Mr. Sharma, good morning. Always a pleasure having you on the show. In addition to this number, what one of the auto sector experts told us yesterday was that the trend is continuing in November. We were told that apparently November registrations, overall auto registrations, are as high as 20% over last year. What is it that you're witnessing in November so far?
Well, good morning. No doubt the October, which is the closing of the festive period, and not just the festive period, but all the schemes, etc., various companies draw to a close, and that gives a nice little kick towards the end. And all these things contributed to a fantastic October. November, predictably so, is a decline because from the October rates. The relevant thing would be to look at really October and November combined. We've still got 10 days or so left. But I would say on October and November combined, the industry would be marginally in a growth zone. That's what I would expect. I think we should be in a growth zone, October and November retails combined, when we see the numbers on 1st of December.
So let me reiterate what my colleague was telling you and what we heard from the retailers yesterday, that the October-November combine is 20% more than last year. Would it be that much better?
Sorry, I'm lost the audio.
Okay, if you can hear me now, Mr. Sharma, what the retail guys tell us is that registrations are 20% higher than last year. You can hear me?
No, I think there's a...
All right. I think it'll be a good idea to reconnect over there.
But yeah.
You can hear me now?
Yeah, I can hear you, but a bit faintly, but...
Okay. Well, are the registrations 20% higher than last year? No, I think we will have to get back to him. In the meanwhile, maybe if our technical experts are there, we'll just go to them. Mitesh Thakkar is with us, and in a minute we'll also have Rajat Bose with us. Mitesh, good morning again. What's the 10 a.m. trade?
Yeah, good morning, Lata. So I think, the market has been subdued. Again, the level of around 12,020 came into play. We had a high of 12,028. But I think it's still not weak, so we'll still trade with more of long bias. The calls that I have are a buy on Petronet with a stop at 276 for targets of 290, and HCL Tech, that's a buy with a very tight stop at 1136. Look for targets of 1174.
Mitesh, I have one stock for you, RBL Bank. It's reacting to the story that our colleague just broke. What are the charts saying?
Very, very positive. In fact, it's been a recommendation yesterday, and I think even now I would be comfortable adding on to long. Target which I have is close to about 385, 390 to begin with. So
Rajat is also with us. Good morning, Rajat. What are your stocks at 10?
Well, I have three stocks. First is I would like to bet on State Bank. State Bank, I would put a stop loss below 326.50. I'm looking at targets of 335 and 338. And then I have Infi, which I would put a stop loss below 710. Of course, this trade is unlikely to work because Infi has surrendered all the gains from the morning. And finally, I have Maruti. Maruti, I would put a stop loss below 7149, and my targets would be 7249 and 7287. Overall, one thing I would like to comment here is that the Nifty needs to take out to 12,038. 12,038 to 12,043 kind of range, and Reliance need to stay above 1643. Only then the bullishness in the market will prevail.
Okay, all right, Rajat and Mitesh, thanks very much for giving us the technical trades. Let's now reconnect with Mr. Sharma to continue that conversation on the auto space. Mr. Sharma, what we were trying to verify is whether November so far looks 20% stronger year on year.
Well, it's difficult to compare this November with last November because the last November had the Diwali and, these schemes continue. So it's not a correct comparison. And I would not say that November is looking at 20% plus in retail terms over previous November, which had Deepavali in it.
Okay. So would it be better than last November at all? You think that we are going to get another negative number this year, this November?
Yes, this November retails will be negative over last November because of the Deepavali effect in November last year.
All right.
That's why I was saying that it's better to look at October and November combined because this year Diwali was in October and last year it was in November. So it's better to look at it combined. And when you look at it combined, we should be in a marginal positive growth zone in terms of retails.
Okay, what about sales from the OEMs like yourselves, the wholesalers, to the retailers in the coming months, like say December? Because there is such a huge inventory drawdown, should we expect inventory refills itself to pump up your sales? Besides, of course, slightly better retail showing.
Yes, I mean, if you look at November and December, at least we have definitely faced destocking. And, if we had to be a perfect stock up, I would say that we could have got a little bit more sales in October. So we did run out of stocks, particularly in our new parts of our portfolio. And therefore, in November, there is definitely the billing, as we call it, should be ahead of retails.
Okay, that's
December, I don't think so, because December is really a month where, you know, the year changes, etc. So again, probably retails and billing will be similar.
okay. So just some numbers, sir. What would the inventory levels be for you? If you could give us, you know, average, has it come down to 4 weeks? More than that, less than that?
Yeah, so our opening inventory in November was about 30 odd days, I think 31 or 32 days. And really, if we take into account the secondary channel also, to make sure that you know, demand is adequately serviced, it's good to have about 40 days stock. So to that extent, yes, there has been a little bit of destocking, but we would prefer to be a bit lighter on the stock because you know of the impending BS4, BS6 change. So I'm not saying that we'll go up to 40 days stock, but yet we'll be plugging some gaps here and there, and therefore our billing should be ahead of retail.
Okay, let me get back to the retail behavior. Do you see the retail demand remaining as it was in October, or do you think it will require you to continue to give the discounts you gave in October, or maybe even increase them?
Well, I don't think that they will remain at the kind of levels of October. That was really a spectacular growth, you know, and a lot of it may have been driven by the postponements which the consumer did, because as you know, there was a lot of talk about tax cuts, and so the consumer held back the purchase. And as the festive draws closer, the consumer says that, okay, I'll take the call in festive, because for sure there will be better deals during the festive, and so you know, you can't expect that kind of a surge to continue in November, and definitely we won't. I don't think we should. We will see that continuing.
So just a quick question. You know, your competitors have already launched some of the BS6 products. Hero MotoCorp's bike is out. Now, how is this going to impact behavior from here on? Because I believe the product is going to be at least 10,000 rupees more than the BS4. What is your own sort of strategy here, and how will this impact the overall inventory situation? Or will you wait for the fire sale to take out whatever it can in December and only then look at a BS6 launch?
There's no fire sales.
I mean, discounts. I'm saying the year-end discounts.
Like I've said, that the stocks are... no, you know, we don't, at least in the two-wheeler industry, and for us, it's a normal tactical discount here and there. There is no scramble to, you know, discount the product and have a massive December just before the year changes. That is not something which we have seen. The BS4, BS6 factor, it's not yet come into the consumer consciousness, you know. Some urban pockets here and there, but if you take the full sweep of the country, urban, rural, it's not yet something which is the consumer has started to factor in. The model introductions which have been made probably account for less than 1 to 2% of the portfolios, right? So unless this increases, and this will increase progressively, let's say as we enter January or so, that is when the consumer starts to think that it is becoming real, and that's where we will see some impact on consumer behavior. But November and December is the natural, normal slowdown after a good festive and a, you know, little bit of holding back in December because of the model year change. The BS4, BS6 is not yet playing out, I think. Okay.
Well, a final question then. Leave us with a number. I mean, your domestic sales numbers, if I look at it, it's ranged all the way from 2.29 lakh in some months, actually 2 lakh in some months, to 2.8 lakhs in some months. What average can we work with for November to March?
That's a very difficult one to fathom, Lata, because like I said, we will start to see January, February onwards a strong change in consumer behavior, because the BS4, BS6 thing will play out. And we've tried, very multiple ways of trying to anticipate what it is going to be. And our position is that we want to just make the BS4, BS6 transition properly, without our channel getting bruised, without trying to, time the change and all those things. We want to just make the BS4, BS6 change properly. So now it depends on how the consumer reacts. The consumer can respond in two ways. People can hold back purchase and say, I'm going to go in for the BS6 version because that's safer. Or somebody can take the opposite view and say that, wow, this is going to be cheaper and I'm not going to get this deal, so let me advance my purchase. So we are going to take it month by month and see how it goes. The important thing is to respond very quickly to this behavior, and that's what we are gearing up to do.
That's fair. I guess my question was unfair. Thank you very much, Mr. Rakesh Sharma, and we will of course call you month after month to check out how the experience has been. We have to take a break, but before that, take a look at the financials of Bajaj Auto in the past few years. First up, you will get the revenue performance of the company inching up, no letting up over there, and then you will have the profit picture coming up for you, also climbing, and finally the EPS performance of the last 3 years. That's a steady ship. We will, not take that break. We'll shift focus to commodity markets first and get you the trades at 10. Manisha is joining us. Manisha, what's on your mind?
Nata, thank you so much for that. I'm looking at the metal sector, and within that as well, zinc really seems to be your trade for the day today. Yesterday, we saw 1.5% of decline come in for the prices, and we're another 0.25% down in the trade right now. This is after there have been reports that the global supply deficit has narrowed on year-on-year basis. If we were looking at last year at around 2.7 lakh tons of a supply deficit, that has come down to 1.5 lakh tons, and that really seems to be putting pressure on the prices. The other number that the street is reacting to really is the global zinc mine production that is expected to rise 2% in this current year and by 4% in 2020. That has been weighing on to the prices, and if you look at the zinc prices in this year, they are down by 7.5%. But take a step back, and the last 1 month actually has been quite good. We've seen the zinc prices gain up by nearly 11%, and that has been on the reports of demand expectations. If you look at the global zinc demand in this year, the growth was just about 0.1%, but the expectation for 2020 is much higher at around 0.9%. And within this as well, China is expected to outperform. In the current year, the Chinese demand is up by 0.6%. That is expected to gain up to nearly 1.2% in 2020. But as of now, the markets also are reacting to the US and China trade talks. A deal may not happen in this year, and that seems to be weighing onto the prices also. So for the immediate term, there is some more decline that you could be looking at for the zinc prices. And that is the reason we have a sell call coming in for that from KDR Commodities. They're looking at targets of around 185.50 for the very immediate term. The sell calls continue, and this time around for crude oil prices, we have a call from SMC. They're looking at targets of 4,040 in the crude oil prices for the day today.
Okay, all right. Thank you, Manisha, very much for that. We'll take a break on that note. On the other side, B. Venkatesh Rao, Managing Director at Venky's India, joins in to talk about their Q2 numbers and, of course, business.